Mixed cues from Wall Street, with the Dow surging to close at a fresh record high. Yields dripped as investors await the January CPI print due today. Asian markets trade largely higher, with the GIFT Nifty indicating a positive start for the Indian market. Crude oil prices hold on to last week's gains and trade steady, with Brent hovering around that $82 per barrel mark. Bitcoin extends its gains and breaks the $50,000 mark, hitting the highest level since December of 2021. Retail inflation remained steady in January at 5.1%, slightly higher than expected due to the spike in food inflation. Industrial production grows by 3.8% in December, higher than estimated. RBI Governor Shaktikanta Das holds a post-budget meeting with Finance Minister Nirmala Sitharaman, rules out any review of the Paytm decision, calling it well thought out. Also says lower government borrowing projected in the budget frees up resources for the private sector. In important earnings to track today, Eicher Motors and Hindalco from the Nifty pack will post third quarter numbers. From the broader markets, watch out for Siemens, BHAL, Oil India, IRCTC. They will also report earnings for the quarter gone by. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking. A lot of earnings still trickling in, and we do have a lot of macro data as well. We'll discuss that in greater detail, but first up, let's take a look at the Asian markets. Well, most of them are shut today again. It's the Taiwanese index and Hang Seng, which is not trading. But we do have Nikkei, which has breached that 37,000 mark with the corporate inflation in focus, the earnings in focus. South Korea has returned to trade. So we have Nikkei sitting with gains of 2%. Shanghai is up around 1.2%. Kospi is higher by 1.2% as well. But you're not getting any rates for Hang Seng and Taiwanese index as of now. Let's take a look at GIFT Nifty because that is the one which will indicate the most for our own markets. That one is indicating that the start could be in the green after that massive cut that we saw across the board, be it mid-caps, be it the benchmark. So this one is indicating that yes, maybe it could open in the green, implying an open of around 33 points higher from the current levels. Let's talk about the US markets now. Wall Street ended Monday's trading session mixed. The Dow closed at a record high, surging 125 points. Meanwhile, the S&P 500 saw minor red at the close, and the tech-heavy index, the Nasdaq Composite, also fell by nearly 50 points. Investors will now watch out for the latest level on the Consumer Price Index, a key inflationary gauge set to be released later today. According to a poll, analysts expect the US core CPI to come in at 0.3% on a month-on-month basis for the month of January, but is still elevated 3.7% on a YOY basis. Okay, let's stay with the US markets and let's listen into Seema Shah, who's the Chief Global Strategist at Principal Asset Management, and Liz Ann Saunders of Charles Schwab as they give their expectations on the US CPI numbers that are due later today.
The market at the end of last year expecting 6 to 7 rate cuts for this year. That did seem very optimistic, so it makes sense that the Fed is pushing for that. If the market continues to expect a lot of easing, then that means that you're going to see considerable financial conditions easing, which actually increases the risk of inflation pressures picking up again. So I think the communication is a key part of the Fed's task. But of course, just like us, they will be watching the data. They are still data dependent, which is why the CPI data this week continues to be very important.
Everybody, Fed watchers and the market itself, is at the mercy of the incoming data. And I think that's where short-term volatility could persist, because the Fed isn't on a predetermined course and they're just waiting to, drip the information out to us slowly. You might not necessarily need to see a big outsized surprise, whether it's CPI or PPI or jobs data, just marginally, and that could change the perspective on what the Fed has to do. I think the labor market data comes into sharper focus for the Fed, and he specifically said that in the press conference. Not that they've now taken their eye off inflation, which was the key driver on the upside in terms of rates, but that's a bigger part of the mix, and the decision-making process will be associated with the labor market.
Okay, all right, that's the global market action and opinion, but how will these overnight cues impact our own markets? We have a research team joining in to tell you just that, the market setup, the stocks that are going to be in the news, and the action from the F&O space as well. Let me go across to Sudarshan first up. He's joining us to tell us all about the market cues that we need to watch out for today. Hey Sudarshan, good morning.
Good morning, Sona. So cues from the global markets are mixed, but we'll have to see if we follow the global cues or have our own move just like yesterday. Let me start with US market. It was a range-bound session. Dow Jones has gained 0.3% to post record close, while other two major indices, S&P 500 and Nasdaq, have ended with minor cuts ahead of the inflation data. For our market, it was a one-way move after start in the green, and it was all about PSU companies. Nifty PSU index fell nearly 4% yesterday, and remember, it just hit record high 3 sessions ago, and from that level, it's down more than 7%. And just on Monday, all the PSU companies together have erased market cap of more than rupees 3.5 lakh crore. On your screen, you can see the fall some of the PSU companies have seen on Monday after their earnings, which were either weak or below expectations. SJVN was down 20%, NHPC fell 16%, IRFC was down 14%, Mishra Dhatu fell 13%, and GMDC was down 13%. And some other PSU companies that saw profit booking were New India Assurance, which was down 15%, ITI fell 14%, IRCON fell 13%, RVNL and BEML were down 11% each. Coming to some stocks that saw huge deliveries, Zomato continues to see huge deliveries. On Monday, it saw deliveries of more than rupees 750 crore. Other notable names are from PSU basket. NHPC saw deliveries of rupees 739 crore, IRFC more than rupees 500 crore, and SJVN almost rupees 400 crore. On to institutional activities, both FIs and DIs were buyers in the cash market. GIFT Nifty is indicating a start in the green, but we'll have to see if we manage to hold on to gains.
Okay, all right. So it was a session where we did see big fall across the board. But Sudarshan, stay on. Tell us about the other stocks that we'll be keeping on our radar today.
So I'll start with Hindalco. It will in focus. Novelis has reported Q3 earnings. Adjusted EBITDA was up 33% year-on-year. Profit ex special items up 81% year-on-year. Company has increased capex to $4.1 billion, which is 64% higher than the initial estimate. Coal India headline numbers were better than estimates. Revenue was at 36,154 crore against poll of 35,208 crore. Margin was at 31.5% against estimate of 25.8%. Sale, EBITDA and margin were higher than the estimate, but volumes have disappointed, were down 8% year-on-year. Repco Home Finance loan growth continues to remain weak. Numbers were below estimates. Disbursements were down 5% sequentially. HEG weak Q3 margin was at a 2-year low. Operating profit was down 34% year-on-year. Dilip Bilkon revenue was up 24%. Margin is up more than 600 bips year-on-year. Other stocks, other companies that might react to earnings will be Kirloskar Oil, Galaxy Surfactants, Sansera Engineering, Phoenix Mills, Allcargo Logistics. In other news, Quess Corp Income Tax Department has reduced original demand to rupees 141 crore from rupees 300 crore. Orient Pro Solutions to issue shares via preferential basis at rupees 2,215 per share. JSW Energy has bagged order for 500 megawatt wind power projects from Solar Energy Corporation of India.
Okay, all right. That's a long list that we have to take care of today. Thank you so much, Sudarshan, for joining us. Finally, let's talk about the FNO space. Nigel is joining us now. Hey, Nigel.
Well, hey, Sonal. Yesterday was actually a big trading session. Both the Nifty and the Nifty Bank were under pressure. But there was no big shorting that we saw in yesterday's trade. The FIs, though, they added some short positions. They added close to 4,000 short contracts. Takes the short positioning to around 66% odd. On the option side, there was writing that was seen at around the 21,700, 21,900 call as well. Between them, they added close to around 65 lakh shares out there. And that's what took the PCR to around 0.85. Remember, normally we see the markets bottom out or, see a bit of a bounce once we go to that 0.65 to around 0.7. What are the levels we're looking at? Well, support levels I'm looking at 20 and the 50 DMA on the Nifty. While on the Nifty Bank, the 200 DMA, we ended around there yesterday. The recent high comes up for you on the screen. Also watch the Nifty Financial Services Index that plays out its weekly expiry today. Back to you.
Okay, all right. Thank you guys for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, we'll throw spotlight on the January CPI and December IIP print. Stay tuned for that analysis. Welcome back. You're still tuned into Power Breakfast. As promised, let's focus on the big domestic macro cue we are tracking this morning. India's retail inflation remains steady in January, comes in a tad above CNBC TV 18 estimates. Meanwhile, industrial production has grown by 3.8% in December, higher than estimates. Lata Venkatesh filed this report after the inflation numbers were out yesterday evening.
Well, today's inflation number is a slight disappointment for the market. While it's 5.1 compared to 5.03, which is CNBC TV 18 poll, many in the bond markets were expecting a sub-5 number, 4.95 or thereabouts. That's always psychologically more satisfying. Now, the Reserve Bank in its February 8th policy had brought down its forecast for Jan-Feb-March quarter from earlier 5.2 to 5%. With January itself coming at 5.1, chances are it may not be able to meet the 5% forecast. It could be ending a little higher, but just marginally higher, if that. The only worrying part of the inflation number is not this headline inflation of 5.1, but food inflation, which has come in at 8.3%. Now, the CNBC forecast was 7.4. Last month, December, was 9.5. Compared to that, 8.3 looks good, but the internals of food is not very satisfying. Cereals inflation is up about 0.5% month on month. It is up about 7.9% year on year. Now, cereals is a good 12% of the CPI basket, and cereals, of course, is the staple food for the country. That index, that price item going up month on month and year on year is going to be very negative from a political standpoint, from a humanitarian standpoint, and definitely from a policy-making standpoint for the Reserve Bank. The other numbers, vegetables, pulses, are all coming down, but pulses is still about 19.5% higher year on year. That will also be a source of worry. Other elements in the food basket are not too bad, but winter is always the best time for veggies and fruits. So, we can't be too happy that veggies and fruits have come down month on month. By the time we come to March, April, even those could rise. Sugar is another negative element. It's up about 7% year on year. So the government and the Reserve Bank have their task cut out when it comes to food inflation. The positive for the Reserve Bank is the fall in core inflation to 3.6%. Now, core inflation is something the Reserve Bank's interest rate policy actually impacts, and that's a success story, coming down to 3.6, well below the 4% mark, which is the mandated headline inflation target for the Reserve Bank and the MPC. So that's the good news. Very quick mention, IIP number coming in at 3.8% is better than our poll of 2%. Within IIP, it's manufacturing at 3.9. Nothing very gung-ho. Capital goods has fallen a bit to low single digits, but consumer non-durables and durables are at least in positive terrain. But the IIP number is nothing much to write home about. It's not very important for policy making. It is CPI that's important. And over there, it is, not very good news. It's just about a little higher than expected. So bond markets will not be cheered much tomorrow by this number.
Okay, all right. Thank you so much, Lata, for bringing us your take on the macro numbers. Let's slip into a break now. On the other side, in a post-budget meeting held yesterday, the RBI governor defended the action taken against Paytm. We'll get you more on this when we return. Welcome back. You're still tuned into Power Breakfast. RBI Governor Shaktikanta Das held a post-budget meeting with Finance Minister Nirmala Sitharaman and other officials in North Block yesterday. Speaking after the meetings, the governor defended the action against Paytm and ruled out any review of the decision. He reiterated comments made during monetary policy last week, saying the decision on Paytm was well thought out. He also said that a FAQ for the benefit of Paytm users will be issued shortly. Listen in.
There is no, at the moment, let me say very clear, there is no review of the decision. If you are expecting a review of the decision, let me very clearly say there is no review of the decision. FAQ which we are proposing to issue is targeting the inconvenience or targeting the issues faced by the customers and the the customers and the depositors, like all the FASTag holders or the wallet users or the account holders. कस्टमर इंटरेस्ट में जो इश्यूज है उसको हम अभी FAQ में डील कर रहे हैं, लेकिन रिव्यू ऑफ डिसीजन फिलहाल ऐसा कोई रिव्यू ऑफ डिसीजन इज नॉट ऑन द टेबल.
Okay, all right, let's move on. The MSCI has announced its February quarterly review. My colleague Vivek Iyer is joining us with a list of additions, deletions and details of the rejig. Hey, good morning, Vivek.
Good morning. In a widely expected event, so what's actually happened is that MSCI has announced the review as far as the month of February is concerned. Now, what's actually happened is that once again, it's a net inflow event as far as India is concerned, and India's weightage as far as the MSCI Standard Index will now go well beyond the 15% threshold. Now, again, this is quite positive as far as some of the stocks are concerned that will be included into the index. So, there are 5 stocks that have been added into the MSCI Global Standard Index. So, which are the stocks? Most of them were expected to get into the index. So, remember, do not expect too much of a build-up in today's trading session, but still important given the fact that on February 29th, these stocks will see passive inflows. So, the first stock is NMDC. The stock will see inflows of over $160 million. GMR Airports, a slight surprise, over $140 million of inflow over there. Union Bank, BHEL and PNB are the other stocks that will get into the MSCI Global Standard Index. Now, apart from that, what's actually happened is that MSCI has also gone and announced 27 additions and 6 deletions from the small cap index. So, these stocks too will be in focus. Well, the inflows will be much lower in that. All of the inflows that we have are from IIFL Alternative Research.
Okay, all right. That's the Feb 2024 review for MSCI. Thank you, Vivek, for joining us with all those details. Let's quickly take a look at what the Asian markets are doing. Continues to do well, at least when we talk about Nikkei. It is above the 34,000 mark, 37,000 mark on the Nikkei. It's up around 2.5%. The Shanghai is higher. And we do have the Kospi, which has come back after a holiday, which is sitting with gains of around 1.5%. The GIFT Nifty, that should come up for you, and that one is indicating an implied open at least is suggesting that it could be a green day for our own markets, but we'll have to see which way things go considering the sharp fall that we saw in the broader markets and the Nifty as well. With that, it's curtains down on this edition of Power Breakfast. Thanks a lot for tuning in today, but do stay tuned. Bazaar Morning Call comes up next with all the market action.